Hello, beautiful people. Welcome to our evening live session. Right. So this is the session where I'll be teaching you guys how you can start trading the forex market the professional way. Okay. So first off, because of those that are just joining us for the first time, those that are still new to the forex market, I've decided to restart the training from the beginning. Okay. So today we're going to be starting with the introduction to forex trading. How you can start, trading the forex market, because obviously you need to know what you are going into before you even know how you can start trading. All right. So first thing first, forex, right? Forex trading. Okay. Right. Also known as right. So forex trading. Okay. So today, what we're going to be focusing majorly on is, introduction to forex trading, as I've said. Then I'll be introducing you guys to how you can actually start, trading the forex market. All right. So let's go with the introduction. Let's go into with the introduction. So forex stands for foreign exchange. Okay. So it was just cut short. Okay. So anywhere you see forex, 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 what they mean is foreign exchange. Okay. So some will say forex, some will say fx. All right. So it's the same thing. They are still talking about forex. They are still talking about foreign exchange. And how does foreign exchange works? Um, so take for example, you have dollar. Okay. Maybe you are in Nigeria right now, and you have dollar. So obviously you can't spend dollar in Nigeria. Okay. You can just walk into any shop now and say, I want to buy this, and you give them dollar. They will ask you to pay in naira. Yeah. So what you want to do is you want to go to um, an exchange vendor or bureau de change. Okay. Exchange vendor like the abokis. Okay. Where we normally change our dollar to naira, or you go to the bureau de change to make your exchange. Okay. So the process in which you exchange your dollar to naira, that process is called forex. That process is what we call forex. Okay, because you are exchanging your naira, your dollar to your local currency so that you'll be able to spend it. All right. So the same thing applies to other currencies also. All right. Okay, so sorry about that, guys. Let's continue. So, as I was saying, forex mean foreign exchange, also known as FX. Okay, and I've already explained how the transaction in forex works. Okay, if you have a foreign currency, it's not just US dollars. So, yeah, even if you have any country, any other foreign currency, okay, even if it is Kenyan currency, all right, you obviously can't spend it, um, you know, you can't spend it here in Nigeria, all right. So what you want to do is you want to go to Bureau de Change to exchange that currency to the currency of your own, of your, of your country. So the process in which you make that exchange is called forex. Okay, so now it is quite different from the forex trading we do here. All right, because this forex trading is done live. Okay, it's not the manual process, the manual way where you go to Bureau de Change or go to a bookie to make your exchange. This is quite different. Okay, but the process is the same thing because you are exchanging the one you have for the other one. Okay, so in forex trading, as a forex trader, now you want to become a forex trader. How do you make money as a forex trader? It's very easy. Okay, so as a forex trader, we speculate on the movement of price. All right, that is how we make money in forex trading. So we speculate in price movement. All right, you are either speculating that dollar is going to rise tomorrow. Okay, I'm going to buy since it's rising. Okay, or maybe dollar is going to come down. No, let me sell since the dollar is going to go down tomorrow. You understand? So you are speculating on the price movement of any particular currency. Okay, so that is how we trade the foreign exchange, the forex. Okay, so in forex trading, we have different kind of currencies. Like as I've said earlier, you can only trade the currencies in forex trading. Okay, because it is forex, it is foreign exchange. So what are we exchanging? Foreign currencies. Okay, so you are exchanging either your naira to dollar or your dollar to whichever currency you want to exchange it to. All right. So and then the currencies cannot be traded except if they are in pairs. Okay. So with the explanation I've made, you can't trade just a single currency. It has to be two. Two currencies are always involved before they can be traded. Okay. So from my example, I said US dollars, Nigerian naira. Okay. I said maybe you have US dollars and you want to switch it, you want to exchange it for Nigerian naira. That is two currency. The first currency is the Nigerian naira, the second currency is the US dollars. Okay. So the combination of two currencies becomes a pair. Okay, so when we have two currencies, we say we have a pair of currency. Okay, pair of currencies. Okay, because they've become two. You understand? So the forex cannot be traded without two currencies, as I've said. And then in the forex market, we have different type of pairs. All right, we have different type of pairs. You see, these are pairs. These are the currency pairs we have. We have so many different type of currency pairs. All right, you see, we have so many type of currency pairs. These are different currencies of different countries, and they are paired together. Okay, so now talking about currencies, we have when they appear together, they actually have a name. Okay, so let's use GBP USD. Okay, so this is a pair. This is a currency pair. We have the GBP and the USD. Okay, so let me just separate that so that you guys will see that better. So you see, this is GBP. This is the Great British Pounds against the US dollars. Okay, this is a pair of currency, pair of currencies. All right. So now they actually have names, even though they appeared together. Okay, they have name because in forex trading, when currencies are paired together, there's always one that comes first and the other will go second. Okay, so when that is done, the first one has a name, the second one also has a name. The first one is the base currency. Okay, you might want to write this down. The first one is called the base currency, while the second one is called the quote currency. Okay, so the pair of GBP USD here, the GBP is the base currency, while the USD is the quote currency. Okay, and then we have, if you look um, here, you see these different pairs. Okay, so here AUD comes first, while the CAD goes second. You see, so AUD, Australian dollars against the Canadian dollar. So in this case, AUD, the Australian dollar is the base, while the Canadian dollar is the quote. Okay. So the Canadian dollar here is the base, while the Swiss franc is the quote. Okay. So and so on and so forth. All right. That is how to differentiate between the currency pairs. Okay. And in the forex market, we have what we call the major currencies. Okay, we have the major currencies. So the major currencies are actually those currencies of um, standard economy. Okay, so they are they are the you know most traded pairs in the forex world. Okay, everybody loves trading them. Why? Because they are the most popular pairs. They are the most popular currency in the world. Okay, so and then there is 8 of them. Okay, the major currencies comprises of 8 currencies. All right, so I'll be writing that out. Let me just write that out. Okay, let me write out the 8 major pairs we have, major currencies. Okay, right. So those are the major currencies we have. You see, these are the major currencies we have in the forex. Okay, in forex trading. So we have the USD, we have the euro, we have the Great British pounds, we have the Japanese yen, the Canadian dollar, the New Zealand dollar, the Swiss franc, and then the Australian dollar. Okay, so they are 8 in number. You see, 1, 2, 3, 4, 5, 6, 7, 8. Now, aside major currencies, these are the major currencies. Okay, and aside major currencies, we also have major pairs. Okay, remember what I said about pairs? Pairs are when currencies are paired together. Okay, when currencies are paired together, they become pair. Okay, so this is just the major currency. Now we have the major pair. Okay, so the major pair, let me just label that before I continue. Okay, so the major pairs, you see here we have major currencies. Okay, these are, like I said, these are the major currencies. But here we have major pairs. Okay, so the major pairs, those are the pairs that when they are associated with the USD, they are the major pairs. Okay, and those pairs are the major currencies here. All of these major currencies, aside the USD. Okay, when all of these major currencies are paired with the USD, the United States dollars. Okay, so look at this. The 7 other major currencies. Okay, the seven other major currencies. So when we remove the USD, you see it becomes seven. One, two, three, four, five, six, seven. Okay, so I remove the USD because the USD is going to be paired with all of this: Euro USD, GBP USD, JPY USD, CAD USD, NZD USD, CHF USD, AUD USD. Then associating them with the USD, they become the major pairs. Guys, I hope you are following. Okay. So if any of these major currencies are paired with the USD, they become major pairs. Okay. And they are major pairs because they are the most liquid. Okay. That is where money is. Everybody loves trading them because they have a very small spread. Okay. And they go smoothly. All right. So we have the minor pairs also. Okay, we have the minor pairs. So as I've said, the major pair are those pairs that are associated, the major currencies that are associated with the USD. Okay, so the minor pairs, when we are talking about the minor pair are those, you see all these seven major currencies. So let's remove this. Let's remove the USD. You know, we'll be left with seven major currencies. Okay. So when they are associated with each other, okay, when they are associated with each other, they become minor currencies. Okay. So take for example, if we associate euro against GBP now, it becomes a minor pair. GBP CAD, minor pair. NZD CHF, minor pair. CHF AUD, minor pair. Euro AUD, minor pair. GBP AUD, minor pair. Okay, it's just as simple as that. And then we have the exotic pairs. Okay, these are pairs we are just talking about when they are associated with each other. Now, the exotic pairs, those are um, currencies of underdeveloped countries. Okay, so when a currency of any underdeveloped country is associated with all of these, they become an exotic pair. So take for example, we have the Nigerian naira. Okay, Nigeria is a developing country. So let's say we have USD against NGN, right? So USD NGN, USD NGN, NGN is an exotic currency. Okay, it's an exotic currency. So if you pair it with the USD right now, it becomes an exotic pair. All right. So we have other countries, not just Nigeria. All right. So there are so many other countries that are emerging economy. Okay. There are other countries, the South Africa, Kenya, Ghana, they are all under exotic pairs. Even the Indian currency is also under exotic pair. All right. The Mexican currency is also under exotic pair. So it's not just the Nigerian naira. Okay. So moving forward, in forex trading, we have the brokers. Okay, so let me just delete all of this. Let's delete this. And let's talk about the brokers. Okay, brokers. Okay, brokers. So these brokers, what do they do? Brokers are like the intermediary, okay, between you, the buyer, and another person that is selling. So the very moment you are buying, they are pairing you with a seller, or the moment you are selling, they are pairing you with a buyer. Okay. So these things are done automatically online that you don't have to understand. All right. That is their own job. All you have to do is just register your account and fund your account and trade with them. All right. And that is what BtcDana application is all about. Okay, it's a trading application, so it's a broker application. So what they do is you register, you fund your account with any amount you want to fund, but I will advise you to fund up to $15. Okay, so as a newbie, I want you to listen to me, please. This is a very important information I want to pass across. All right. So as a newbie, we have a signal group. All right. And what we do on this signal group is we provide signals every day. I personally I provide up to three signals in a day, at least three signals in a day. All right. So these signals, I provide them so that you can make money. Okay. So right now you are still learning how to make money from the forex market. So you don't have to wait until you become that professional. Becoming a professional in forex market is not a day job. Okay. So as a professional right here, right now, I've spent more than 5 years in forex trading. Okay. So becoming a professional is not a day job. It's not something you learn within a week and you start making money. It's not as easy as that. So it needs a lot of knowledge, lot of understanding. It requires um, psychological. There are other factors that you need to learn before you can actually become a professional. Okay, you just wake up one day and decide, okay, I want to become a forex trader. Okay, let me just attend this class for a week and then I'll start trading. It's not as easy as that. So that is why I am making it easy for all of you. Okay, so as a beginner, all you have to do is just fund your account with at least $15 on this live stream. Okay, so let me just show you, let me share with you what we do on our premium group. All right, let me share with you what we do on our premium group. Okay, so let me just take. So let me show you the result I posted on the premium group. I don't want to show you. Let me show you I don't want to show you just the picture. Okay, so let me show you the picture I posted on the premium. All right. So guys, just a second, just a second. Okay, so picture coming right up. Okay. All right. So let me share the picture with you guys. Let me share Windows and photo. Okay. So this is BtcDana Leo's premium group. Okay. So you see, this is currently what is going on in the group. You see, I told them close position, guys. We made profit already. You see, and what happened? Look at this. We took this trade in the afternoon. USDCAD. I made, look at this, $13, 13.48, 13.41. This is XAU USD. And we made profit from this also. Guys, just calculate all of this and imagine how much I'm making every day. Imagine how much those guys in the premium group with me, imagine how much they are making every day. Okay, so I'm just giving you a glimpse of the benefit you'll be getting once you become a member of my premium group. All right, I'm just showing you what you'll be getting when you become a member of my premium group. Okay, so that is where I provide the signals. All you have to do is just come, they fund your account with at least $15. Okay, and you have to do that on this live stream. So if you want to do that right now, just go to the chat room. Okay, go to the chat room. Click on that banner where deposit with benefit is written on. Okay, or I think there's another picture where recharge is written on. Just click on that picture or go to the banner. Okay, at the top of the chat room there's a banner where deposit with benefit is written on. Click on that picture, click on that banner, and it will take you to where you can fund your account. Okay, just follow the procedures. It's very easy. And account details will be generated for you. Okay, send the equivalent, the amount you've entered in dollar, send the equivalent in naira to them. Okay, so when you fund, and guys, please make sure you fund at least $15. Okay, don't go to the home screen and then click on deposit. If you want to deposit, go to the chat room, click on that banner. All right. If you click on that banner, that is the only way I can confirm that you made deposit on this live stream. So if you deposit on this live stream, I'm going to add you to my premium group. And when you are on the premium group, we make money together every day. It's just as simple as that. All right. So let's continue our session. Let's continue our class. So we have the brokers, as I've said, they are the intermediary between you, a seller, and a buyer. Okay. And that is what the BtcDana trading application is all about. Okay. And then in forex trading, we have what we call pips. All right. We have what we call pips. Let me write that out. So we are done with brokers. Let's go to pips. Okay. So pips means price in points or percentage so percentage in point. Okay. So pips simply mean price in point or percentage in point. Okay. Sorry, I think that okay, yeah. Or percentage in points. So first of all, this is the meaning of pips. Okay. But pips is actually the difference between an ask price or a bid price. Okay. So in the forex market, we have something that looks like this. Two lines, they are always above each other. One is always above and the other one is below. Okay, they will be following each other up and down. They will be following each other. They are the price points. Okay, they are the bid price and then the ask price. The bid price is always at the top, while the ask price is always below. Okay, so the gap between them is the pips. Okay, the gap between them is your pips. Okay, sorry. The difference between the difference between the ask price and the bid price is your pips. Okay, so your pips is like the movement of the market. Okay, it's just like when somebody is walking right now and you say the person is walking in steps. So the market, moves in pips. So another example is um, our time. Okay, so the time moves in seconds. Yeah. The same way the forex market moves in pips. Okay. So all you have to understand is the difference between the bid price and the ask price is the pips. Okay. So when it's moving, when the bid price or the ask price is moving, okay, and you want to get your pips, the difference between them it will be calculated here. So you start seeing it. Okay, so right now let's assume this is our bid and this is our ask price. You see, for the bid price, which is the first one at the top, we have 0.88805, and then for the ask price we have 0.88775. So if you minus this from this, then you get your pip. Okay, that is the amount of um that is the amount of you know movement between the bid price and the ask price. Okay, and then in the forex market, how do you actually calculate your pips? Guys, I want you to pay close attention to this. All right, so your pip is actually the fourth digit after your decimal point. Okay, I said the market move in pip. All right, so when the market is moving in pip, how is it actually moving in pip? Okay, and there's a way to find out which one is actually your pip so that you can focus your concentration on that. Okay, so look at this. We have 0.88001. Okay, so after this decimal point, after this 0 point, the fourth digit is the pip. Okay, so here we have 0 point, then after the point, 8812, another 03, then the second zero, which is our fourth digit in this case. Okay, so this zero is our pip. All right. Every time the zero changes, it means the market is moving in pips. Okay, and this last one is our point. All right. Um, People don't concentrate to the point because it's just like our work clock. So when you are calculating your time, we always calculate our time. The normal calculation is start from the seconds, yeah. But when you want to check your time, you are looking at the minute and the hour. Okay, you are not actually paying attention to the seconds. Okay, because the seconds is not that relevant. Okay, even though it's the one moving the whole time, but it's as if it's not that relevant. So the same thing applies to the point here also. Okay, 10 points make one pip. All right, but we are not worried about the point. Our focus is the pips. So anytime the market moves, it moves in pips. Okay, and then guys, we have what we call spread in the forex market. We have what we call spread. Sorry. Okay. So we have what we call the spread. So you see, the other time I was explaining spread, I mistakenly explained spread instead of um, instead of pips. Okay. So if you remember, I was saying the difference between the gap inside is our pip. Okay, but I corrected that. All right, I corrected that. So the gap inside our bid and our ask is actually our spread. Okay, this gap, the movement is the pip, but they always have this gap. Remember, I said we have the bid price at the top and then we have the ask price below. So the difference, the gap between them, the gap inside them is the spread. This spread is like a commission for the brokers. Okay, this spread we are talking about is like commission for the brokers. All right. So when you see that spread, that means your broker is taking some certain amount from the position they are placing for you. So anytime you place a buy or a sell, that is the commission they take before they open, they help you place your position. Okay, but at BTC Dana, they don't do that. Okay, they have their own way of taking commission. They have the admin charge. Okay, they have the admin fee. So they are spread. If you go to the BTC Dana trading application right now, you won't even notice the bid price and the ask price. Okay, they are inside each other because they have zero spread. Okay, they have zero spread. All right. So, guys, let's move on. Let's move on. Next, we are going to talk about leverage, leverage and margin. Okay. So in forex market, we have what we call leverage and margin. Okay. So this leverage and the margin, they are kind of different, but at the same time, also a bit similar. Okay. So let me do something like this. Okay. So we have what we call the leverage and the margin. You see this leverage? Leverage is, sorry, just a moment. Okay. So leverage in Forex is when your broker allows you to control a large Forex position with a small deposit. Okay. So it is represented in form of a ratio. Okay. And it's not something that you can, see. All right. So this leverage, as I've said, is a way of, on the norms, we are not supposed to trade the Forex market with $10. Okay. It wasn't supposed to be possible to trade the Forex market with $10. The lowest amount, back in the days, the lowest amount that you can use to trade the Forex market starts from around $100,000. Okay, $100,000, millions. Okay, $100,000 or $1 million. That is the lowest amount you could have before you can start trading the forex market. But the brokers, they felt like, even the individuals, the retailers, okay, people that want to be trading it individually, because the forex market was actually meant for the banks, okay, industries, big companies, all right, even a whole country trade the forex market. But they felt like, even the retailers, people that just want to be trading the forex market individually, should also have the opportunity, okay, to make money from the forex market. That is how they came about with leverage, okay. And what this leverage does is it magnifies your account. So let's assume that you have a $1,000 account right now, and a company is, offering you a leverage of 1:500. So let's use this first one here. Let's use this first example. So let's assume BtcDana offers 1:500. Okay, so let's use that. So let's assume that you just created an account, and BtcDana is offering you 1:500. Yeah, you see this one in front is your margin. Okay, and this 500 is your leverage. Okay, so this one, it means this, they are in percentage. Okay, they are in percentage. So this one is your 1%. So if you are depositing $1,000 right now, the $1,000 is your 1%. The $500 is the leverage they are going to magnify your account to. Okay, this is the leverage they are going to magnify your account to. So your own 1% will be magnified. That means they are going to double it times 500, into 1,000 times 500. Okay. So do the calculation and see how much they are magnifying your account to. So assuming you have $1,000 account right now times 500. How much is that? That is 500,000. Okay, so they are magnifying your $1,000 to 500,000, so that it will look, to the forex institution, it will look to them as if you are trading a $500,000 account. Okay, so this is not as if they are giving you the $500,000, or it's something that you'll be seeing. Okay, they are just magnifying your account. They are making your account look big to the forex institute. Okay, that yeah, this person is worthy of trading these currencies. Okay, you understand? So that is all about leverage and margin. Guys, if you have any question on leverage or margin, please let me know. Okay, if you have any question on any of the topics or any of the subtopics that we've talked about, please let me know. Okay, so let's move on. Let's continue. In the forex market, we have what we call stop out. Okay, we have what we call stop out. So this stop out means when you are on a losing position. Okay, let's assume you open a trade right now. Maybe you say you want to sell. Okay, so let's assume the price was here, and then you want to sell. Okay, when you are selling, this is how the forex market goes. The forex market doesn't go on one straight line. Okay, it will keep creating low and going up, coming down. All right. Sorry about that. So let's assume you have this and you want to sell. Okay, so we are talking about stop out. Okay, so you are selling, you want to sell, but when you want to sell, the market start buying. Okay, you are predicting a sell, you are speculating that the market is going to sell, but instead the market is buying. So when this kind of issue happen, you are losing. Okay, you will be losing in your position. You'll be losing money. Okay, and then what traders, what are brokers, the forex brokers, what they do is they have this stop out. Okay, so what the stop out does is, maybe let's assume you have a $50, okay, let me use $100 account. Let's assume you have $100 account right now, and their stop out level is 70%. Okay, so what this means is that your $100, when you say the market is, it should be selling, and then is buying. So let's assume with your $100 you open 3 positions. That means you took 3 trades. Okay, you took 3 trades, and then let's say the first one you are losing up to maybe $30, or maybe $50, or rather, okay, let's use $40. Out of $100 you are losing $40 on your first position. Your second position you are losing $20, and your third position you are losing $10. So 40 plus 30, sorry, 40 plus 20, that's 60, then plus 10, that's 70. Okay, and then their stop out um uh percentage is 70%. Okay, so what they mean is that if you are losing 70% of your account, they are going to stop you out. Okay, they are going to start closing your trades. All right, so that you they will be able to keep you in the market. So this way they are not trying to, put you in the market so that they can keep, eating your money. All right, they are not eating your money. What they are doing is, in fact, they are protecting you. Okay, they want you to close the trade. They don't want it to just keep running until all of your account just go away at once. Okay, so they will start by closing the one that you are losing the most. So the one where you are losing the $40 will be the one they will first close. Okay, and then you are now losing what? You are losing when the $40 is minus from your account will be remaining $60 because you have $100. Okay, your balance, your equity will remain 60. All right, your balance will still be showing 100, but now since you've closed some positions, your equity will now remain um 60. Now that's 60. Now the other two open position, that is the 20 and the $10, if you lose 70% of that $60, another position will be closed. So they will keep closing until your account gets to the point where it can't hold trade anymore. You understand? That is stop out. So why they do that is because they want you to come and, maybe when you see you are losing, they feel like you want to close the trade yourself. Okay, they don't want your account. They don't want everything to just go away at once. All right, so that is all about stop out. So whenever you are on a trade, you want to apply risk management. What we call risk management is you use small lot size. Okay, so we are getting to smaller to lot size. You use small lot size, and then you want to open just a position, just a trade, okay, with the lowest lot size, with the lowest volume, so that you'll be protected. Even though the market is going to go against you, even if you have $10, even if you have $15, it doesn't matter. If the market is going to go against you, you are going to lose just um a small amount of your capital. All right, so that is that on stop out. And then we have lot size. All right, so currencies are traded in lots, which represent the amount of currency pair that you are buying or selling. Okay, so in the forex market we have what we call the lot size. All right, the lot size is the amount. So take for example, let's assume you want to buy a pen. All right, so pen is being sold for 15 naira. Okay, okay, let me use 10 naira for example. Let's assume you want to buy a pencil. All right, and a pencil is being sold for 10 naira. It's a fixed price, 10 naira. Okay, now let's assume you want to buy more. Okay, if you want to buy 5 pencil, that is 5 times 10. Okay, it's going to take more from you to buy 5 pencils. All right, but if you are buying just one, you are going to pay 10 naira. So the same thing applies to the forex trading market. Okay, so the volume you are buying this if you buy too many, if you are going to lose, you are going to lose more. Okay. But if you are on the profit side, you are going to make even more profit. All right. So that is why I said in forex trading, we have what we call risk management. Okay. So as a beginner, I'll advise you to stick to, using small lot size. All right. So I want my BtcDana application to come up so that I can show you what I mean by lot size using the app itself. Okay. So let's just give that a minute. Let's just give that a minute. I want to show you the lot size on using the BtcDana trading application. Okay. So let's continue. Let's continue. We'll go back to lot size once the app has come around. Okay. So after the lot size, I'm going to teach you guys how you can actually interpret a trade signal. Okay. So that if you are here and you want to join my premium group where I'll be sending the signals, I want you to know how to decode a signal, how to interpret a signal. All right. The things you should do when I give a buy or a sell signal. All right. Okay, so my app is coming up. I want it to load fully and then I'll share my screen with you guys. All right. So guys, if you actually have any question you want to ask me, please feel free to ask. All right. Feel free to ask your questions. This is a session where where you learn. So if you have anything that you want to ask me, please feel free and go on. Go on with any question you have. So let me show you my BTC Dana trading application. Let me share my screen with you guys so that I can show you lot sizes. Okay. So I hope you can see this. I hope you guys can see this. Sorry if this is too small, but I just want to make sure that you understand what I'm explaining. So this is the front page of the BTC Dana trading application. All right. So here is the market. Okay. So first thing, you want to come to the market, and if there's any trade you want to take care, these are the popular instruments. Okay. So what we mean by popular instrument is those all of these you are seeing here, BTC USDT, USD, XAU USD, Ethereum USDT. All of these here are the popular instrument that people love to trade on the BTC Dana. Okay. So they've just put it here because most people love to trade them. Okay. So you can decide to trade anything you want. They have so many instruments, they have assets, they have the forex instruments, they have the crypto instruments. All right. If you are a crypto lover, you can trade the crypto also. And again, forex trading, all right, is the same thing as crypto trading. Okay. Just the currency is different. The same way you trade the forex market is the same way you trade the crypto market. So if you are familiar, if you know how to trade the forex market, you are good to trade any other market. All right. So in this case, we are using the forex because we are learning about forex here on this session. All right. So let's use this first one. Let's use Euro USD. Now, if I want to buy or sell, let's just use any of these. Okay. Let's use any random one. So let's assume we want to buy. Now, this is your lot size. Okay. You see this first one here is 0.01. The second one is 0.10. You can see it here also. The third one is 1, 2, and then 5. Okay. So this is the volume. You can call it volume. You can call it lot size. Okay. It is the amount that you want to sell. All right. So if I want to use 0.01 of my capital to buy or sell Euro USD, it will start reading starting from 0.01. Okay. So the more I increase the lot size, the higher my risk. Okay. So if I'm going to lose, if I increase lot size, if I'm going to lose, I'm going to lose more. If I'm going to make, I'm going to make more. But if I decrease lot size, if I'm making profit, the profit will come, slowly. But if I'm also losing the market, the losses would come slowly. So I won't just lose my account to a particular trade, okay, just because I used a heavy lot size, okay. And how do you open positions here? How do you open position? All you have to do is just, you saw the way we got here. Okay, let me just restart that so that you get it from the beginning. This is home. This is how your home page looks like. All right. So what you want to do is you want to come to market. Okay. So when you get to market, you want to choose any of the instruments you want to trade on. All right. Maybe GBP, USD, GBP, JPY. All right. And then you either buy or sell. All right. So guys, I think we are okay for Forex introduction. If you have any question on the introduction that I've made, please feel free to ask. Okay. If you have any question you want to ask me on the Forex introduction, everything that we've done here, please feel free to ask. Okay. So moving on, I want to show you how you can decode or interpret a signal. Okay. So if you are new here and you want to join my premium group, sorry guys, just a second. Okay, so let me share my slide with you guys. Let me share my slide. So this is how a signal looks. All right, this is how signals looks like. So let me bring this slide up front so that you can see this better. All right, so this is how to interpret a signal. All right, on the premium group, this is how I send signals to them every day. Okay, so don't worry about this one. This is just a heading. Okay, BtcDana premium signal. This is just a heading, and this is an intraday trade. Okay, so in forex trading, we have different type of traders. We have scalpers, we have intraday traders, and then we have the swing traders. Those are the three type of traders we have. So the scalpers, those are the traders that want to make sharp money. So they are just in the market for maybe few minutes, okay, maybe 15 minutes, 30 minutes, or even an hour. Okay, they are just capping the market to make easy money. They don't stay long in the market. In fact, they don't stay up to an hour. Okay, they want their market to start playing out. They trade on the 1 minute most of the time. All right, and then we have the intraday trader. So the intraday trade mean a trader that hold trades for within a day. So let's assume we take a signal right now and the market is already running. Okay, so if the market is an intraday trade, it's going to take, it can happen within an hour, it can happen within few hours, couple of hours, but it's an intraday trade as far as it's going to be it got executed and it's happening within that day. All right, so the trade can take maybe few hours, it can take 3, 4, 5 hours, but it doesn't matter as far as it's still within the day. Okay, and then the swing traders, those are the people that they hold trade for days. Okay, they can hold trade for maybe weeks, months, even years. Okay, they can place a trade now and they won't check the trade until maybe weekend. All right, they can place a trade and decide, okay, well, this trade is going to run for 5 days. All right, so maybe after 5 days they go to check if they made profit or loss. All right, so those are the type of traders we have in the forex market. Okay, and this is the signal. The signal, this is XAUUSD. This is gold. Okay, this is gold. So let me do this. Let me do this. The signal, this is a gold signal, but it could be something like this. It doesn't matter. GBP USD. Okay, but the information I'm trying to pass here is that This is the currency we are trading. This is the pair we are trading. Okay. It could be GBP USD. It could be any other thing. Okay. It could even be GBPNZD. Okay. But what it means is that this is the instrument we are trading. Okay. All you have to do is just go to your BtcDana trading application and look for this pair. Okay. There's a search bar. You just type this and it will bring this out for you. Okay. So when it brings it out, just click on it and it will take you to the page where you see that buy and sell button. Okay. So now this signal here, this is a sell signal, right? So this could be buy, it could be buy or it could be sell. Okay. So what it's telling you is that when you go into your app after searching for this, after getting to this, okay, you want to the buy and sell button below, you are clicking on buy if this is a buy, okay, and you are clicking on sell if this is a sell. All right. So that is how to take signals. And then we have take profit and SL, that is stop loss. So TP means take profit, SL means stop loss. All right. So note this down, guys. Note this down, and let's do this using the app, the BtcDana trading application. Let's do this using the app. All right. So let me bring back my trading app. All right. So I have my app here. What's the signal again? Let me check. Okay, so the signal is GBP NZD. Okay, the signal is GBP NZD. The first thing you want to do is, if you are on the home like this, you want to go to market. Okay, so down here below, click on market, and if you can't find GBP NZD here, all you have to do is just come to this search bar. Okay, this circle, click on it. You see, it brought out a search, and then I type GBP NZD. You see, this is GBP NZD. All you need to do is just click on it. Okay, and you see it brought out the chart. This is the GBP NZD chart. Okay, and the signal, what was the signal? The signal is a sell. Okay, let's use sell. The signal is a sell. All you have to do is just click on sell here. You see, after clicking on sell, it brought out this box. Okay, this option box. And I'm using the lowest loss size, 0.01, because I have small balance. Okay, so the next thing I want to do is, you see, here we have SL/TP. Okay, so TP means when you open a position. Okay, so let me just quickly explain that before we move on. So this is a chart. Okay, this is a chart. So imagine you say you are speculating that this market is going to buy. All right, there will be a point where you want the market to get to give you the profit that you've made. Okay, that point is what we call TP. So let's assume in this market now you are speculating or you are predicting that this price will get to, this is 2.07667. Okay, so you are saying that this market will buy all the way to this area. So this is where your TP will be, because when it gets here, you make profit, and your profit, you are giving the market instruction that when you get here, oh, I give my profit, I'm not trading anymore. You understand? So the stop loss means that if you say this market is going to buy and is selling, that means you are losing. Okay. So that place where the market will get to and stop your losses is called stop loss. I don't want to lose anymore. I've already lose some certain amount of money, and I'm okay. I want to take my remaining balance. All right. So that is stop loss. So what you want to do is, now that our trade signal is a sell, we sell, and then you click on this SL and TP button. Okay, so you see when I clicked on it, it brought out the option, the place where I can enter my stop loss and my take profit. That is my SL and TP. Okay, so SL goes here. All you have to do is just type the number. Okay, the numbers. All you have to do is just copy that number. Okay, the number on the trade signal, just copy it. Okay, and then paste it here. All right, and then copy the one for the TP, the take profit also, and then paste it. So once you are done, click on sell, and you see order successful. Okay, you see it's very easy as ABC, very simple. All right, so you see our trade is running. All right. So let me quickly explain the second part before we close for today. So sometimes, let me close this. Okay, so you see I close the trade. That is how to close a trade. Now let's go back to the slide and let me show you something that is also very important. Okay, let me show you another thing that is important. So here we have this is a trade intraday. Okay, so sometimes if you are on the premium group, sometimes you see me do something like this. Okay, so I'm doing this so that if you join the group, everything we are doing there will not be new to you. Okay, so this cell will not be sell now, it will be sell limit. Okay, so you see intraday trade, and I said pending order. Okay, the signal is still GBP SZD, and then it's a sell limit. What this means is that this market, we are not going to execute it instantly. We are setting a pending order. Okay, and then we are setting a sell limit on this, on the pending order. Okay, so I want you to take a look at this before we go into the chart. All right. So now let's go into the chart and let me show you how to do this on your BtcDana trading application. Let me share the chart again. Let me share the BtcDana trading application again. Okay. So now we have a pending order for sell limit. Okay. What you want to do is, come to market again. Click on this if you are not seeing the instrument you want to trade. So the trade is GBP NZD. Yeah. So click on GBP NZD. It will take you to the chart. So the signal is a sell. Okay, I clicked on sell. It's a sell limit, and I say it's a pending order. Okay, so what you do is, you see we have position, and then we have pending order. Okay, so you click on pending order because the signal is carrying a pending order. So you click on pending order. You see what I did first was click on sell because I'm setting a sell limit. Okay, but I can only do that. I can only set a sell limit if I click on sell and come to pending order. Okay, so whatever I enter here right now is the price I want the market to get to before it actually gets executed. All right, so the number in front of the sell limit is the number you enter here. Okay, and then you set your stop loss and your TP also, and then click on sell. All right, it's just as easy as that. Okay, so guys, I hope you understand all the explanations that I've made. I try to make it as easy as possible. Okay, so I think we are okay for today. Let's stop here. By tomorrow, by special grace of God, we'll continue, and then there we will be doing analysis. Okay, I'll be introducing you guys to analysis, how you can actually start analyzing the market. All right, so guys, please, if you haven't fund the account, go and fund. Okay, fund the account. Let's make money together. You don't have to be a professional right now. All you have to do is just fund the account. Okay, if you fund the account right now, if you're able to fund right now, I'll add you to my premium group, and then you get the benefit of getting trade signals even without being a forex trader. Even though you don't know how to make analysis right now, you get signals. Okay, and you make money with the signals. We make money together. You understand? So guys, fund the account with at least $15 to be qualified to join the premium group. Okay, and if you are able to fund the account with $200, you even get a better benefit. Okay, you get a one-on-one session with me. All right, and on that session you can decide to ask me anything. Okay, I'll put you through everything that you need to know. I'll even show you my personal strategy. All right, so guys, that is that, and we've come to the end of our live session for today. Tomorrow is another day, and by 2 p.m. tomorrow we'll be holding our afternoon session where we'll be analyzing the market and taking trades together. Okay, so if you haven't found the account, guys, please make sure you fund before tomorrow afternoon. All right, because tomorrow is another day and there will be news. All right, there will be news, and we will be taking opportunities of the news. All right, so I'll see you guys again tomorrow. Have a blessed evening. Good night, and bye for now. Bye bye.